Hey guys, let's review the M1 Finance Roth IRA. Right now, the Roth IRA has recovered 26%, $213 gain. You guys can quickly see at the bottom that I have allocated my stocks into these little sector pie charts, right? As you can see at the bottom of the screen, technology, healthcare, industrials and aerospace, consumer goods, finance, utilities and energy, consumer discretionary, and real estate. In order to do this, guys, I had to sell off every stock in my portfolio and rebuy those stocks back to set them in the pie charts that you see before you. Really weird, guys. This application, M1 Finance, is not beginner friendly. Very, very hard to. I just don't understand why I can't have the company. So I buy the company and I can just put the company into a pie graph. Like I can create a pie graph that says technology, but I have to sell all my stocks and then I have to buy the stocks again within the pie graph, and then I have to put the pie graph into the Roth IRA. It is so confusing, guys. It's so confusing, but we're just going to quickly talk about how the portfolio has sort of cleaned itself out. A lot of companies are inside these little pie graphs. There's going to be 4 companies that represent each pie. So you see technology, there's going to be 4 companies. Healthcare, there's going to be 4 companies. Industrials, there's going to be 4 companies, because those companies represent a 25% allocation of the total $1,700 that you see on the screen. So it's actually $1,697. But very confusing app, guys. Why did they make it so confusing? How come it can't just be like Robinhood, where I buy and sell a stock? Why? Okay, technology. Let's go over technology right quick. Up $16.13, 4% gain already. And I just started this portfolio like 2 days ago, and absolutely insane. Microsoft up 7%, Activision Blizzard up 5%, Intel up 4%, and IBM up only 1%. So again, guys, you saw in the last video, I was up some 30% with IBM, but since I sold the stock and bought it back, the percentage gain reset. And the weirdest thing about this is that it kept my average price of 107, which I just don't understand. And all the dividends are gone. All the dividends again. So all the dividends I was getting from the company gone because I sold the stock and then I bought the stock back. Why is it so confusing? But again, I love M1 Finance. I love the drip features. We're just going to quickly get through this portfolio, guys. I said I want to get through this portfolio. Technology looking really, really solid. Healthcare. Let's take a look at healthcare. Up $4.64, a 1% gain. United Health, Giant Healthcare Stable up 4%. Merrick and Company up 2%. AbbVie up 0.57%, even though I had AbbVie before in portfolio. And Abbott Laboratories down 0.20%. So some really good health companies to see in my Roth IRA. Let's take a look at the industrials and aerospace. That sector is going pretty good now. Sort of a lot of stocks in this sector are oversold because of the trading war and a lot of fears in the market. A.O. Smith Corporation up 4%. They will actually show. So all the companies that I actually did buy, they are looking pretty good here. 4203. Pretty good average price there. United Parcel Service up 2%. Boeing up 2%. I was pretty big on Boeing at one point in time. And Caterpillar up 2%. Aerospace and defense putting in some pretty good work. Consumer staples, guys, consumer goods up 3% on them. Let's take a look at the companies inside the portfolio. Procter & Gamble up 4%. Colgate up 4%. Coca-Cola up 3%. And General Mills up 1%. So a lot of, I think at least 3 of these companies I had, or maybe 2 of these companies I had in the portfolio before. Consumer goods rocking it. I like to see that. Finance, take a look at the finance sector. Visa up 5%, JP Morgan Chase looking good, Morgan Stanley putting in work, and Main Street Capital, business developmental company, up 0.85%, and they pay a monthly dividend yield. Pretty good to see there. The whole pie of your utilities and energy, the whole pie of finance is up 2%. Utilities and energy, let's take a look at utilities and energy. Royal Dutch Shell up 3%, ExxonMobil up 2%, PPL Corporation up 4%, really good with PPL Corporation, and Dominion Energy up 2%. So some of these companies I had in portfolio before, total $5 for a 3% gain. So let's take a look at the discretionary sector. Just pull it up here. Disney up 3%. McDonald's up 2%. It was really a big up on McDonald's. I think average cost was 170 or so. Target Corporation looking pretty good. And Ford Motor Company actually down on this stock, but my average price, I bought it long before is where it is now. I think it's at $9. I bought it at $7 or so. Pretty good blue chip companies in the portfolio. You guys can actually kind of tell that I've sacrificed a little bit of dividend growth for. I sacrificed a little bit of dividend growth to get into these companies that have like gains, like high gainage growth or something like that. All the Disneys and Microsoft that don't really pay high yields, but they have tons of growth potential. Good to see you there. Yeah. Real estate. Let's take a look at the final market sector of the portfolio. Reality income up big on them. EPR Properties pays monthly. LTC Properties pays monthly. And Iron Mountain rounds out the real estate pie. 0.46% gain. Really good to see there. So the Roth IRA has been cleaned up. I just didn't like the look of the entire Roth IRA. I was looking at it and I'm like, I need to get these companies into the market sectors, because if I have the companies in market sectors, I can just go to the portfolio and just look at technology. I probably like technology that has all technology stocks in it: Microsoft, Activision, Intel, and IBM. So if there's a particular company that I want to put inside the portfolio, I can do that now. And it's just weird how I had to sell off everything in order to do that. Earned dividends still looking pretty good. I'm still rocking it with the dividends, 57.97. Market gain looks pretty good. And the return, 26%. So even in a market like this where there was a heavy correction some time back, not too bad, but the portfolio, 26%, is really good to see. This is my Roth IRA, guys. You guys can take a look again. I have sort of cleaned up the portfolio a little bit, and I'm definitely liking what I see. That's going to do it for my Roth IRA, guys. I'll see you guys next time.